So with me just now, three people, one of them I'm sure you know, the other two probably less. So we have Magdalena Herman from Persistent. You say Persistent or Persistent Cap?
Persistent Energy.
Persistent Energy, sorry. So principal data consultant. We have Andreas Lehner, serial climate entrepreneur. So we know you since like 8-9 years ago when you were leading Trine. And we'll let you explain what Trine was. And since then you have had a few other ventures. So
explorations, I would call them ventures. But yeah.
Okay. Well, you will tell us a bit. And Mr. David, Benjamin David, CTO at Solaris Offgrid for nearly 9 years now. So yeah, if you don't mind taking a minute or two to introduce yourself with the words you want, as per where you come from, what you're doing currently, what you want to do later. It's fairly open. We're among friends, so it's not recorded. Yeah, sure.
So hi everyone, I'm Magdalena. I'm originally from Poland, but I'm based in Barcelona now. As you both mentioned, I'm a data consultant and a solutions engineer at Persistent Energy since almost 2 years now. So Persistent is Africa's climate venture builder. So we invest in companies that are based in Africa and have a good impact on the climate.
Would you have names of companies? Maybe some would be able to relate, names that we would have heard of?
Probably Altec, for example.
Altec? You know about them? Some culture, yeah.
We're also a fund advisor for EGF.
EGF, okay.
Anyone recognizes it. Yeah, and essentially what I do at Persistent involves due diligences, technology due diligences. So I assess IT setups of companies and help them kind of identify gaps and give them recommendations on what they can improve to facilitate scale. I also do a lot of data since I'm a data consultant. I do data infrastructure implementations such as data lakes, data warehouses, or data lake houses. So with the dashboards, implementation of low-code applications such as AppSheet, and workflow automation. And actually, I've been in this sector for almost I think 6 years. Since before Persistent, I've been at Enable Digital. Maybe some of you have heard of it. It was a company founded by Persistent and Shell Foundation, and we focused on IT advisory, IT consulting for similar companies in Africa, but also we developed our own loan account management software.
Okay, thanks. We can hear Magdalena well on the back. Yeah, okay. So then if we are on that tone, should be fine. Andreas, yeah?
Sure.
Maybe you can tell us more about it.
My name is Andreas. I'm originally from Austria. We know each other since, like you said, nearly 8 years because I've had a startup in Sweden. I've been in sustainability probably 15 years now. Studied in Sweden, got into sustainability because I watched Elgo's first documentary when I was in high school a long time ago. And straight out of university, co-founded Trine, which is a crowdfunding platform for solar energy projects in emerging markets. That's how we got to know you guys when you guys were still doing solar systems in Tanzania. And basically what we do is we finance the capex of solar. In the beginning of solar home systems, then we did C&I, or we basically focused a lot on C&I and mini-grids. And we finance that through people like you and me that have money on the bank account from 20 euros to 100,000 if you're lucky. And they put money in the form of a loan to finance the assets, and then through systems like yours, they get repaid from the money, the mobile payments that the customers do. So I did that for nearly 8 years as a co-founder and COO. Traveled a lot to Africa, got to see a lot of the companies that do it. It was very inspiring. And then nearly 2 years ago, I decided to leave and go back to venture building / adventure building, I don't know. Basically trying to go back to build a climate startup, to do something from 0 to 1, and explored actually one more idea in the Africa focus, which was the idea of using Bitcoin mining as a productive energy user for mini-grids. Because basically with Bitcoin you can monetize energy anywhere in the world with an internet connection. So we did that together with the UADP and 2 of my co-founders. Unfortunately, we realized with solar it doesn't make a lot of sense because of the uptime limitation that solar has. There's a company in Kenya that does this with hydropower, and that makes a lot more sense because you have 90% plus uptime. So that was half a year of my life, and now I'm exploring a similar idea, but with other types of wasted energy, mainly in the methane space, using wasted methane emissions. Even though we probably have to pivot again, that's why I'm saying exploration is more than ventures, because we haven't really found our product market fit yet. Yeah, I think that's a good first overview.
Yeah, cheers. Side lesson from it is like when you reimburse your debt 8 years later, you can invite the creditor to.
Well, we're not creditors anymore, are we?
No, we paid it off.
No, we paid it off.
On time.
On time.
Very good, last point.
Ben, I mean everyone around knows you, but there are a few people in the audience who came this afternoon who might not be super familiar with your talents.
All right. Hi everybody, I'm Ben. I'm the CTO of Solaris Offgrid, and I've been doing so for the past 9 years. So we've been through quite a lot of different stages in the company. When I started, we had still, as Andreas mentioned, operation in Tanzania. I was then leading a little bit the product development more on the hardware side initially to develop the solar kits, and then we started developing also at that time the software that now became PaygOps, which we used initially to pilot operations in Tanzania. So there wasn't like any off-the-shelf software. We started developing that with a small software team that since has grown quite a bit. And yeah, like as the company evolved, we sort of got out of doing operations ourselves. And we got out of doing hardware ourselves, making our own solar kits, and instead focused on what became PaygOps, the software that is now used to manage like last mile operations for distributors, not only of solar kits but also of different products, of cook stoves as well, going to the e-mobility sectors with a few clients doing motorbikes, as well as in the agriculture sector, doing micro-lending for agricultural products and inputs. And that's about it.
Quite a complete picture. Thanks, Ben. So yeah, this panel should last about 40 minutes, about so, max, with a few questions from the audience. Last year we were lucky enough to have a panel in Kigali when we had the team gathering that involved manufacturers and investors. Everyone was quite hyped, despite the fact it was the end of the team gathering week. A lot of questions, very interesting questions. I'm sure we can do as good this year, so I count you. No pressure. So yeah, so 3 kind of chapters that we're going to address today. The first one around data, machine learning, AI and Web3 at large, and how you believe it can affect software like ours, how you believe the market responds to it today and tomorrow per se. Then when iterating and developing technological solutions at large, any return on experience, any feedback, the quick wins and other failure patterns you have identified, given the context of BOP, Sub-Saharan Africa, and so on. So it would be good to address that in a second point. And then the third is more about digitalization within this this context, this environment. Like what's your understanding of the market and your vision for the future? So it's a bit more perspective per se. So only 2 years later on LinkedIn, watching this video, will be able to tell whether you were right or wrong. And so the idea is to spend more or less 10-15 minutes on each, give snapshots, and probably let the audience ask complementary and smarter questions that we don't have far off in the first place, because they are full of engineers. I'm just here passing on patterns. Maybe Magdalena, if you don't mind, we can start with you. Like when I said data, machine learning, AI, Web3, for many, it could be almost like weird barbarian names. So, is it something that the classic SME would understand and appreciate, or isn't it a bit like exotic? How do you like? What have you faced in your data consultant principal career at assistant dealing with those notions?
Yeah, I mean, so I think these are all a bit of buzzwords that people like to throw around. What I've seen also, like companies, everyone is claiming they're doing or want to do machine learning, for example. Whereas when you go and see what they're actually doing, it's just simple data analysis. But when I think about AI or machine learning, I think a big topic in the sector is, of course, credit scoring. This is already there is a lot of work done by companies, for example, like Nitio. And I think also among investors, it's an important topic because there is hope that more transparency in the portfolio quality will actually bring in more investment into the sector. But the other side of this is what we're already seeing is that the repayment rates in companies across the sector are actually really low. So the other side of this, that having more of this transparency can actually draw investment out of the sector, because the quality of the portfolio is so low in many of those companies. But I think also what we should all kind of consider with this is that this sector, I feel, was started to kind of help the poorest communities. And if we start looking at credit scoring and start favoring communities that are essentially medium or high level income, then the impact side of this sector is actually kind of getting forgotten a little bit. And the funny thing is, what I hear also from funders, or investors, they want to not only see that the company is kind of sustainable, but they also want to see the impact. So they always asking to see impact metrics. And if we start focusing only on portfolio quality, we might end up not having the impact side on the other hand.
Okay, I see. So then the way for you to be focused on both would be to use those technologies, for instance, for credit scoring. That's a way to both measure the impact, like who you are serving and why. Why
not necessarily.
Not necessarily.
I think,
Okay.
One important thing is with the models for credit scoring is to kind of not put all of the countries in Africa in one basket, because they differ quite a lot culturally and with level of development. So if we kind of train the model based on the data that is, for example, from countries like South Africa or Kenya, and then try to translate it into DRC context, we can actually kind of end up excluding most of the country. So I think it's good to make that differentiation. And also I think a way for companies to have both a sustainable business and impact is to differentiate their product portfolio. So include higher end products that bring in the income and their look really at credit scoring and the quality of customers they bring in, but at the same time keep sort of like the most basic product line like solar lamps that are really targeted to the poorest communities, so that we can actually still reach those. So essentially, because this the Paygo companies still need to survive in order to kind of have any impact at all.
Okay, but yeah, so to survive, I guess it's a matter of cost benefit per se. So probably Ben, you could help us on this. Like, is the use of those technologies, is it in a position somewhat to reduce or optimize operating costs? Like when we talk ML, data or AI, like to what extent, beyond the buzzwords, to what extent that has like an operational effect on the cost management to remain sustainable?
Sure. So yeah, as Magdalena pointed out, there can be, like with the credit scoring, some application of AI that can be a little bit of a threat to the lower income population, that can make you intentionally or not exclude some of the more base of the pyramid clients, because you try to get a higher portfolio quality and you try to apply technology for that. But other applications of machine learning or AI can help reduce costs, which in turn can allow you to be to serve customers that otherwise you wouldn't be able to serve because of the cost structures that you have. And some applications I can think of related to that in particular are automations of things that until relatively recently weren't really possible to automate easily, and that with AI become more and more possible to automate. So things such as like the know your customer process, like validating IDs, things like that, that used to be extremely difficult, very manual process, involving like people physically checking documents, lots of manual input, time consuming, and hence creating like a cost per loan that was quite high, are now like more and more automated, and you see like service emerging using AI to automate that process, where a quick picture and everything is done basically in a few minutes. Other things are also more operational. So some aspect that used to be very manual is that if you have a large portfolio of clients that you might need to contact for different reasons, such as upselling, it was very manual to try and filter out which customer might be more suited, whereas with the use of AI, and in some cases just all data analytics but applied in new ways, you're able to make like a good profile of what's within your customer, which one might be interested in your products, and also design offers that are more tailored to the actual need of the customers, because you can now like sort of automate that process. You don't have to make large assumption and build just like 2-3 offers. You can have upselling and offers that are a lot more targeted and a lot more likely to match the particular needs of individual customer within your customer base. So that's like a second aspect that also will help, I think, serving communities that might have more limited means, by really targeting just the product that they really need, and with as well like payment terms that are more tailored. So instead of having just 1 year loan for everybody, you can use this AI and credit scoring. Instead of excluding person, you can use it to instead make sure that the loan that you provide is a loan that the person will be able to repay, like adapt the condition. Maybe it needs to be a little bit longer and a little bit cheaper, or vary some of the parameters for that. And finally, more on the operational way, another way it will affect costs is, I think, like the automation of really like operational day-to-day tasks, such as like allocating tasks to agents or to call center customers automatically for deciding which of, for example, people that are late on their loan, which of them are most likely to be able to be convinced, in which order you should sort of call the clients that are late on their loan or are likely to be late in the next few days, as well as prioritizing like customer support tickets and things like that. There are things where it can be more easily transposed from other use in other markets, and readily transposed to that market, like prioritization on tickets and things like that, that will really help like reduce like the human intensivity, like the labor intensivity of those operations, and hence reduce operational costs and make those financial products more affordable for communities.
Okay, I see. So that's overall that's a way to bring costs down to some to some aspect, or at least to optimize the cost. Andreas, earlier you did mention crypto, and to me it sounded like you know credit scoring, optimizing who you want to work with. Furthermore, like how to optimize your processes to bring costs down. On like the Web3 and the crypto, like to some extent, how can we expect to not make money, then make the financing of such operation cheaper? Like, do you have anything to tell us about this, because you have experience on that?
I mean, I've explored it for sure, and I know there has been a lot of buzzing around crypto and blockchain and Web3 in the last few years, and I think it's shifting to AI now, but I think we have still a lot of use cases to explore, and I don't think everything needs to be on the blockchain. I think there's a lot of blockchain ideas that are just a database that could be in a central place as well. But I think in this setting, there's a few things where it actually makes sense, and one is financing, like transfer of money is a lot cheaper with a blockchain solution, with a Web3 solution. And obviously there is the diaspora that sends money back to Africa quite often, and that's a much cheaper option for them to do that. There's also the option to actually finance assets through Web3. There's platforms that do that already. For instance, a company called Helios that does basically what we did at Trine, building a crowdfunding platform to finance their assets. They do that, but they tap into the crypto space directly. And that's really powerful because there is billions of dollars already in crypto. And a lot of it is not doing anything really. I mean, it's just flying around. And then if you can build something that actually takes the money out of the digital world and connects it to the real world again, it's not going to have 1000% per year returns, but everybody knows that that's not going to be sustainable anyway. You can actually really channel a lot of financing. And that's what they're doing, for example. And that makes the financing a lot easier because at Trine, one of our biggest challenges was to raise the financing. And one of those challenges was to take a person, put their credit card and put money on our platform. If you tap into a Web3 decentralized financing exchange, the money is already there. You just need to pick it and put the money there. So that's one. Web3 itself, I think, also has a lot of applications when it comes to like sharing assets. Because we're moving more and more to sharing economy, especially in the Western world, but also in Africa, I think. And like if you rent an electric motorbike, for example, you want to own it, or you don't want that asset is really owned by a centralized entity, because at some point everything will be owned by Amazon or whatever, and we're all just going to rent it. And that doesn't sound like a future that I want to live in. But if you put that on a blockchain with a decentralized autonomous organization or something like that, the ownership is all across the users, which means you're not depending on one company making a decision if you get access to the assets or not. So I think that's another application that's going to be quite interesting to see, and I've seen a few mobility startups that are trying to do something there, to have basically the scooter on the blockchain and you can buy portions of it. And then the last one, which comes with, I think, the transparency of blockchain, is also that it can be used both in terms of having identity unit, because we know there's a lot of fraud, at least in some countries with voting, for example. And you could really reduce that by having digital identities that are unique. There's a company called WorldCoin, it's a bit controversial, but they scan people's iris, and by doing that you get a unique ID on the blockchain, which means you can't really fake it because you need an eye to get an ID. And then if there's a unique ID, you know that that's a person, and if they, for instance, vote, then you know that it can't be a copy-paste from somebody else. And also I think in the space that we are in here, I think there's a lot of corruption when it comes to foreign aid and kind of DFI money going into countries, where a lot of it is kind of going somewhere where nobody knows what's happening. And I think there is something there where you could, if you put it on a more transparent medium like a blockchain, you actually have traceability all across. So it's going to be much harder, not impossible, much harder to actually take money away
Mm.
on the side. So there's a lot of, I think, areas of fraud, corruption, identity, and kind of transfer of finance where the blockchain is still usable, and I think there's going to be a lot of ideas that pop up there in addition to what's already there.
Okay, cheers. But what I get from what you three said is like, you Magdalena said like, a lot of people refer to all those buzzwords saying, yeah, I do machine learning. It's just, simple, like the very basic data science. Ben explained to us, how deep, can be credit scoring or other means of automations to through machine learning to get, further optimization of the cost. You explained to us like through Web3 and blockchain how we can lower the cost of financing such initiatives. The naive question I have is like, how is this truly accessible for SMEs? Like maybe Magdalena, if within a minute or two you could share your opinion about all those magic words, and it sounds so complex to me. Like how can this be effectively, like how blockchain, how machine learning, or AI can be effectively used by an average SME that we deal with every day?
I think it's a good question, and I think like these technologies have a potential to help a lot of businesses to kind of like expand or like have a better angle. Like for example, you could imagine any mobility company maybe using IoT and AI to make vehicles that are safer, for example, the kind of and a selling point. I think the problem is for many of those companies, they lack funds and they lack kind of resources, like highly skilled resources in order to implement these types of innovations. So it's not very accessible. I think what we're trying to do, for example, in Persistent is also not only with those technologies, but like simple IT projects. When we invest in companies, we kind of try to provide these type of services pro bono as a type of an addition to the investment, with keeping in mind that this kind of helps those companies kind of scale and grow into more profitable businesses. So this way, we kind of both sides can win.
Okay.
So that's one model.
So there is no magic recipe. It's like either you kind of give it away because your interest is on something else, like the return on investment per se, or somewhat you have very friendly investors who understand the value of that and they can basically disburse a bit of money on the side to get you equipped.
Yeah, or kind of non-profit organizations kind of helping those companies access these types of services.
Okay. Now, when developing tech, and those elements could clearly enter into the way, probably more the operational ones, like the obvious door to force usually is like to make sure the technology, is fit for what the client wants, for what the company on the ground wants. You just need to ask them. At least it feels like just don't develop on your own. Make sure you co-develop per se, and you ask them. Although that sounds a bit naive, because necessarily the client won't necessarily know what they want and how they need it, or if they have assumptions, they could be wrong. So probably Ben, you can share with us a few lessons how to get honest and true feedback, like true as per not assuming the person will lie to you, but there could be bias in the way you collect information. So do you have any quick wins on there?
Sure. So something that we found was quite important when trying to get feedback is often to not actually ask directly, because often your points of contact when you're developing software will be more like senior management at the organization, people that are like your point of contact within the organization because they're the one paying for the software. And also some of those users will have very good knowledge of the product, and in that case they can give you like good honest feedback. one thing that we found is that this feedback is sometimes missing aspects that they often don't even know about themselves, because the flow of information from the field even to the manager is often imperfect in companies, and there are aspects that are also soft feedbacks that people don't necessarily think about telling them, because it's telling their manager, because it's not necessarily perceived directly as a problem, but that can still have a big impact on the operation. Then that kind of feedback usually can be found mostly by going to the field directly and sort of shadowing the users. So we found that when you go to the field and start shadowing some of the field agents directly, or the people working in shops, and watching them do their day-to-day work, you can actually get a lot of feedback that even the direct manager of those agents wouldn't be able to formulate in the same way. It's often not necessarily spoken feedback, but feedback that can be the frustration that you can see when you see the agent like using something that maybe takes a bit longer than they expected to take, or that the flow, the workflow that was expected and designed in the process is not the actual flow that you have on the ground. So maybe there is like a process that was defined with a sequence of events, but in real life, maybe the client doesn't have his ID card with him, so like the step of taking the picture of the ID card actually might not come after asking for the name, it might come later, and all those practical changes that you have on the ground might not be things that are reported, because they're deviation from the process, but there are things that if you go on the ground and you realize this deviation, makes you able to capture that soft feedback, that small frustration and small things that then make you able to make a product that's more flexible and more suited to the real use case that you have on the ground.
Okay. I guess you two have had different exposure, not necessarily as a not necessarily selling a software per se on the ground. Maybe you have some different learning and return on experience of this, like trying, yet to have a technology that really answers the needs on the ground, iterating from experience and feedback you collect. If probably Andreas.
I mean, I think when we look at like building for Africa, there's always this idea that we put the Western view on it a little bit. But in the end, it's not very different from building for anybody else. You always have to build for the customer. And I think when you look at entrepreneurship in general, which is basically building something new, you don't want to build a solution first, you want to understand the problem. You don't want to go for a middleman, you want to talk to the end user directly. So a lot of that is very similar to building software in Sweden or in Spain. It's not super different, it's just that I think the selling is even more different than if you build in Spain, that you might be really far off if you don't do it. Because if you have an assumption that this is how life is in Spain, you're probably relatively right, but if you have an assumption this is how life is in Kenya, you might be really far off, or how the processes work when you're on the ground, versus you have a better understanding of your own culture and your own setting. But still anyway, talking to the customers, building for the setting, which in the Africa context is very much understanding that not everybody has a 4G connection, you can build an app for everybody who has a smartphone, having those realizations on top of actually being on the ground and looking behind the shoulders. And we at Trine, we never assumed anything when we were investing in companies as well. I mean, from a very different point of view, we were building a product for solar energy companies in Africa, and we hardly ever had really hard rules on them, because we always said they will know best what they're doing. We don't really know how it is to build for a customer in Tanzania. Obviously we had certain minimum requirements, but we always said like, they know how to target the end customers. We didn't have a lot of opinions about this stuff, for example. So I think iterating, having an MVP, focusing on the problem before you focus on the solution, because otherwise you get married to a solution that maybe doesn't make any sense.
Okay, fair enough. On your aspect, Magdalena, it's a bit different, I find, because you are mostly involved in the due diligence, as far as I know, I could be mistaken. So you're here to often as well check whether the the technology is suitable or not, and you are addressing people who you know, you try to get information from them as well. Like the context is a bit different in the way you try to assess whether the technology is fit or appropriate to the business.
Yeah, I mean, I do due diligences and implementations as well, so I had, like, I think I have 2 learnings that I could share also back from Enable, I can tell you a horror story from one implementation of loan account management software. So, I mean, one learning is that essentially, you know, when customer comes to you with a feature request, it's also important to kind of challenge it and more guide them into kind of explore whether what they're trying to implement is really like a unique feature that will really help them, or they could actually adapt their business processes to more standard practices and actually kind of save the money and time of developing something special that doesn't add too much to the business. But another lesson that we've learned really hard way at Enable was to include all stakeholders in the conversations and in the initial stages of design and implementation. Because essentially what happened, we spent months, developing the software and developing specific features for a company, kind of adding integrations with different platforms that they had and that they have chosen. They went live with it, and then a week later they went back to us and they told us that they have rolled back suddenly. And essentially what happened is we were mostly for those months interacting with their tech team, who was kind of involved in also in the implementation. And the assumption was that they would report back to the management what's happening, and also we prepared manuals for the apps, how they work. And essentially what happened is, on one hand, the COO suddenly said that the software, the application network worked completely differently from what he expected. So he was suddenly, from one day to another, everything changed for him. So it was a big surprise, and he wasn't fully aware of what's happening. So one lesson is to involve the C-level management also throughout the process. And the other thing was that the agents, so we provided the manuals to the tech team so that they can also train their agents. However, it turned out that the agents were essentially misusing the software and not understanding how, for example, the offline app works, how the connections work. So that caused a huge mess in the data and a lot of errors that were coming in. So essentially, they weren't properly trained by their team. So I guess the second aspect would be to involve also and be on the ground, as Ben mentioned, and see, make sure that the end users, the agents in the field, really understand how the software works and how, understand their perspective, what is user-friendly for them, what is intuitive for them, to how they interact with the applications.
Okay, so what I get is from your point is it echoes quite well the one of Ben of earlier, about having the interlocutor, and sometimes the mistake would be to use a proxy, assuming that proxy completely masters the situation and would within its feedback consider that aspect as well. Maybe to wrap up this second chapter, what I hear from also your last comment, Magdalena, is it's also a matter about adapting the solution, right, to the initial needs. And what you said earlier, what works in DRC will not necessarily in another country for the machine learning aspect and so on. So it's all about adapting. Maybe Ben, you can tell us a bit more about probably the trade-off versus something fairly standard versus something super tailored, because just having everything tailored is not necessarily the answer for everything, can actually complexify some aspects. So maybe you could help us understand better that.
Yeah, for sure. So obviously there are benefits when you start using like off-the-shelf software, which is it's cheap and everything, but it often will not match the processes of your companies, and many companies want to have things that are more and more tailored to exactly match their processes, even though sometimes, as Magdalena pointed out, the need to implement the exact process of the companies might not be worth the benefits that they get out of it, and they might be better off just adopting standard practices within their companies. And that means that like a lot of the software that are being developed needs to be quite flexible, but obviously that comes as a trade-off of complexity, and it's kind of like a fine line to balance, because the more flexible you make your software, the more different options you give it, the harder it becomes to then train people to use it and even to support it. So if you have 50 clients that use the same software, but the software is so flexible that for each client it works in actually a completely different way, it's going to be very complicated for your support team to support them, for you to create good training material, good manual, and to then be able to establish standardized processes if the software is too flexible. On the other hand, if it's not flexible enough, the companies using it are going to be frustrated, because they're going to have to go the other extreme, which is completely tailoring their processes to the software, and oftentimes at the cost of a lot of loss in efficiency, of a lot of like manual work and things that in the end have like high costs for the business.
Okay. Cheers. I'm checking the time now. Sorry, I have to fast travel a bit. Probably like I'd like to address with each of you maybe the aspect of perspective a bit. When we were talking earlier with Andreas, you strongly implied that for you the PaygOps space was fairly crowded on the tech side. That's something that we could have experienced for the last couple of months, yes. So at least that's a challenge we try to take into consideration. The very light question, the $1 question is like, where could a SaaS like ours innovate then, to stand out in a space that could for some look a bit tricky and small.
Yeah, I mean, we had that conversation before a little bit, right? The PaygOps space is relatively saturated, and I think the mergers that people have been talking about for 5+ years now are slowly happening. So there isn't a lot of new companies popping up, I guess, that have a scale that makes sense to build for. You guys have already expanded into other sectors. I mean, basically, any kind of asset that can be financed makes sense to build for a PayGo system, right? And I think there's a lot of things popping up now with electric mobility, especially in Kenya. I think Power have just introduced some system that they're introducing in Kenya first. So, and I know a few companies that want to provide electric mobility as a service, sharing, and there you will have a certain element of credit risk and kind of managing a portfolio of assets. And the solar space is super big outside of PayGo as well. I mean, one thing that we did at Trine was partially because we saw the PayGo space just not scaling fast enough for our own scaling. We've done over 80 million euros now in investments. Most of that was in the C&I space in the end. Because you have much bigger asset, you have a bigger customer, you have a commercial customer. Yeah, it's a different version of an impact, because obviously you're not bringing energy access in the same type as you do with solar home systems, but you're still bringing renewable and clean energy to places that run on diesel generators, so it's still a climate impact and indirectly a social impact. So we did that, for example. We tailored our offering a lot to C&I and bigger installations to have bigger volumes, bigger business relationships, partnerships, to make the company more scalable. Because with the PayGo setting that we had, we did a 30,000 euro loan here, 50,000 euro loan there, 100,000 maybe. We did with B-Box, we did some bigger ones as well. But the scale is like 10 million with a solar home system company that once it distributed over time was, at least for us, it was difficult. So I think asset financing, electromobility, any types of solar, any types of energy really, that is to a certain version decentralized, maybe. Not a hydropower station, that's a very different thing. That's kind of where it makes sense to go into cook stoves maybe at some point as well. I know B-Box has that PaygOps cook stove idea, LPG for something. So where there's a use case, a high upfront cost for the asset, paying over time, that's going to be really interesting to build for. And there's a lot of scale in a lot of other industrial sectors.
Okay. So if the 2 cents I get from your message is, it's not that the asset financing is dead or too small. It's just it's all a matter about diversifying across verticals to some extent to make it viable.
Yeah, I think you need to look at a blue market, a blue ocean, and I think the pay-as-you-go solar home system space, that's pretty dark red ocean. So you want to and look at something that has billions of dollars potential if you scale the software, and you can do that in emerging markets. There's a lot of customers who just need to find the asset that makes sense for them.
Makes sense. I guess to addition to, or what could contribute to make it from our perspective, from PaygOps perspective, a bit of a reddish ocean is also this whole decision about make or buy, which when you try to provide software is kind of reducing the potential. The market size shrink a bit if you start to consider this possibility of just making your own. Ben, without advocating too much, if you can remain as agnostic as one could in your appreciation, but can you probably tell us with facts what are the hidden costs of making your own per se? Because it could it sounds like more control and cheaper somewhat, but that's just the face cost, right? So.
Right, and it's often what it sounds like when you initially try to design your software and get like a first quote. It might seem like, oh, very attractive. Maybe I need to pay like 100K, and then I will have my own software that does exactly the processes of my company, and it's going to be great. Some of the big pitfalls I think that company needs to look for before they make that make or buy decision is making sure to account for the cost of support. That's one of the first things, because quite often when companies try to get their initial cost estimates for building their own software, they tend to overlook the relatively high cost of supporting it internally. Because even if you build the software yourself, you're going to need customer support for your own teams. You're going to need some human powers that is going to write documentation, that is going to prepare tutorials, materials to train your own team, and that's also going to answer the question of your own team. And that's a cost that's often overlooked, and that's often significant, or at least in the same order of magnitude as the development of the software itself. So that's something that's quite important. The second point that is quite important is the flexibility. So paradoxically, when you think about building your software, you're like, great, I'm going to have all the flexibility in the world because I make it exactly match my processes, which in theory is great, and that could be the case if the company has extremely well-established processes and does not want to innovate anymore, does not want to change anything, and is very streamlined and assume that the market itself is not going to change. In that case, great, because you code your software, you make it match exactly your processes, you have all the flexibility initially to do that, and if you don't need to change, it's good. The thing is, in practice, markets evolve, your company evolved, you try to launch new products, and you try to do a lot of things. And quite often, those softwares that you developed yourself will not have built-in flexibility because you built it for your process, you hard-coded your process, whereas softwares that you buy off the shelf will often have a variety of clients that have a variety of business models and that have tried different things. And so we'll have built in the options to do things differently and flexibly. And the flexibility that you gain in that case is instead of having to wait several weeks for your developers to develop the new feature to match the new business models that you want to try. Instead of that, if you have a off-the-shelf software that is flexible enough, it's often just clicking a few buttons because some of the other clients of that software will have had those experiments, will have had those other business model, and those features will already be built in. And so just in a few clicks, you can actually try one business model, try another, try different things, and actually be more flexible than what you would have with your own software and your own development team. And the last thing is in terms of cost. So this really depends on like your scale and the complexity of what you need. So it is true that if you have a scale that's either extremely large or quite small, it might be worth it to build yourself, because if it's extremely large, often the fees of off-the-shelf software will scale with your consumption, whereas if you build yourself, it might not scale as directly. Like you will need more support, you will need more server, but it will scale a little bit less. If you're very small, you might have very simple needs, and if it's something that, as I said, very stable, very static, and you just code it once, it's going to be fine. However, if you often, which is the case for most companies, if you're in between, you're going to have like a growing need for features, and what you initially like add an initial code, actually you're going to keep developing that software, keep adding feature all the time, and it's just going for your company. So it's going to be all that development cost of those features just for yourself. Whereas if you use off-the-shelf software, it's actually several companies of your size that are pulling together resources, pulling together that money to build the features and share them with each other in the end, which end up being more economical than what you get if you try to build it yourself.
Lovely, but too biased.
Too biased, I'm sorry.
Like with Persistent and the former venture that you mentioned earlier, that was like a Persistent and Shell Foundation venture. You work at Enable Digital, which was probably a bit more halfway in the way you guys back then were thinking about building an IT environment, because you were all about basically an application network where you would mix this whole like taking off-the-shelf features, but with very custom developments and way they would talk to each other, which would probably, but feel free to contradict me if you think I'm going too far, but would be probably a bit of a softer approach than Ben is describing, in the sense that you benefit from those apps being developed for not the commons, but for many user case, yet you would build an architecture that would be fairly unique. Can you tell us a bit more about this, and whether years later you still think that's the way to go, or any other approach that you believe is the trend for the next few years of digitalization of process of processes?
Yeah, I think it's still like in a way to go. So from my perspective, just like finding the best software for each area of the business, and kind of maximizing the off-the-shelf options, and just building a smart network of applications. In a way, you spend more, I guess, in-house development time connecting them, although you could always, of course, use workflow automation, low-code solutions such as Make. So I think that would be the best approach still. And I think in most cases when people try to develop their own software in-house, they sometimes just don't know very well what is available out there, so they don't do proper research of like what each solution could give them. So, and I think it's hard for like a person who never used those solutions to kind of figure out where to start looking, what to compare. So I think, sometimes hiring someone like a consultant that has experience using all types of different software for even a day of work to kind of help them, guide them on what they could actually get out of what is out there, I think is a good approach. And I mean, in terms of, building in-house, I think another thing I saw, like another risk to add to what Ben mentioned that I've seen happen, and it touches a bit on the trends I guess, in digitization in Africa is that I've seen companies that have built over the years their own loan account management software and like the whole network in-house. And then what happened, literally from one month to another, they lost their whole IT team to Accenture because big companies are essentially entering African market because they're tempted by cheaper, highly skilled workforce, and a PaygOps company cannot compete with a salary that Accenture would keep a senior developer. So what happens very often is, companies start off building a software with junior developers. They get trained throughout that process, they become senior, and they leave to another company because they get paid for that. So that's a risk. I think many companies oversee that this could happen, and then they're left with a software with no developers, no one to maintain the solution.
Yeah, that's an issue we could relate somewhat. It has happened in the past. All right, thanks. Many thanks for the three of you. It's not finished yet. It's finished for my side. But careful, they're smarter. Any question you will have to our guests, whether it is about the three topics we have discussed, so core, machine learning, Web3, they can go fairly deep, so feel free to tickle them on the tech side. Or we can talk about the future of digitalization. Maybe you want to challenge or get further feedback there, or whether it can be more about collecting feedback and how to co-create with your client per se. Those are the three topics we try to touch in less than 45 minutes. So feel free to reload, and you have had plenty of time to think about smarter questions, I'm sure. Please go.
I have one just to get started. It connects maybe Web3 with this last conversation about platforms. Where's the thinking about feature as a service rather than software as a service? In other words, one opportunity for innovation is to break down the things that we're providing and create interoperable systems. I don't know if any of you are working on those things or if they're viable.
Apparently none.
Maybe you can just explain a bit, because I haven't heard features.
So one of the challenges when you buy software, any kind of software, is it always comes with a bunch of stuff. And as the buyer, you're also buying other software that comes with other bunches of stuff that always overlaps. And so you're presented these solutions that come out of the brains of smart people with good intentions, but there's so much overlap. In the end, as a buyer, I might just want some component. I just want the client payment interaction, or I just want the managing the books interaction, and why do I have to buy your whole thing just to get this feature? So you can create, I think, just like breaking down a company, you can create a lot more value with the tech that you have by disaggregating it and selling parts.
Feature as a service or microservices.
Right.
Yeah, I think some companies do that already to some extent. Like I know that HubSpot is selling different packages. Intercom, which we used for customer support, basically a chat on the homepage. I mean, you can buy the MailChimp kind of thing where you can send emails, but then you can also just buy the chat. So I think some companies are realizing that already, especially where there's probably a lot of competition and a lot of overlap. But I haven't seen it in a lot of other sectors than marketing maybe, and then a bit of the back-end side of companies.
For us, it's a very active topic at the moment as well. It's something we're definitely looking into as we see more people using PaygOps as part of networks of application, and then just needing some aspects of PaygOps, whereas in other aspects they might have other off-the-shelf product that better match their needs, which is also in some cases good for us because it allows to focus on what we know how to do very well, and maybe we're not going to spend ages developing like very fancy accounting, because we know we have basic accounting that people that don't have accounting software can use, and then if people have more complex needs, they can just use something else.
And we did kind of that approach at Enable, so we kind of built an application network, and we had like a payment hub, a message hub, the loan account management system, the customer registration app, and we kind of also offered selling that separately to customers. So I think that's it's a possible approach, but it adds a bit of complexity on, the way you host things, and again, how to kind of ensure that every single component can also be integrated in every possible application network that the customer has.
On the back.
I think I just have a very quick question. With the mention of Web3, and I really think that's one of the biggest challenges with the operations of Web3 is about the networking, and it has to do with, some of the challenges with metaverse and, the NFTs and, how those transactions are being. And you get to understand that, well, one of the strength, the strongest resource that is needed for the success of Web3 technologies is actually the network. And particularly when you are dealing with Africa, and I don't know which areas of Africa, for instance, it's the network coverage issues. And but coming from that particular background, I understand that in the process of implementation, you have to encounter some of these network availability issues here and there. Sometimes not just the availability, but also the capacity of the network, the strength of the network. The 5G, the 4Gs, and all that. So how do you juggle with that?
It depends on the technologies. I haven't been very deep in Web3. What we explore was Bitcoin mining and Bitcoin as a blockchain. And Bitcoin only needs a 3G internet connection, really. You don't need a very fast internet. That's also why a lot of African countries have adopted it and put their money into Bitcoin to get rid of the crazy inflation that some countries have. When you look outside of that, obviously there is some cryptocurrencies that need more bandwidth, but in the end of the day, you need a smartphone. Sure, you need a smartphone to obviously interact with the blockchain, but you don't need the fastest internet connection most of the time, actually. It's basically like any other homepage, right? You just load a homepage or you connect to some version of the internet, and then depending on how time sensitive your data is, it can take a long time. It doesn't need to be super fast. So actually, one of the reasons where we explored the Web3 experience at IVE was really more on the infrastructure side, so Bitcoin mining, and then we explored AI, machine learning, data centers, as well as a customer for mini-grids. And all of these have a few characteristics. One is they're batchable, so you can turn them on and off, and they're not super time sensitive. So even if you have a slow, Bitcoin is a bit time sensitive if you mine it, but otherwise, outside of that, you don't need a super 100 gigabit internet connection. So I don't think it's the main issue when you look at the context. It's more how the user interfaces are built, how data intensive the user interfaces are. And because it's such a nascent industry, it's getting older now, but a lot of the things that were built on blockchain stuff were really not top notch when it comes to this kind of user interface, which is getting better. And then just slimming that down, but the underlying technology is okay.
Ben, maybe you have a little word to add on innovating within low-tech environment per se, because that's something you've been quite exposed to.
Sure. Although I don't know much about the more Web3 aspects, but yeah, we found that it's really important to know the limitation of the hardware and the connectivity available in the markets we're operating, especially for field agents. So we learned how to support phones that were 20 years old and make sure that we can work offline or with extremely slow connection. And indeed, if you're building more complex products, if you try to do things maybe with image recognition, voice recognition, or things that might require video or audio, you need to be very mindful of the hardware limitations and the connectivity limitations that you have in the markets we're operating.
Cheers. Is there any last question? Because then we'll need to take a short break and move to the next one. Your name is Nelson, right?
I know you gave a couple of examples on some of the use cases, some of the technology we're talking about currently are applied to credit scoring, but I'm curious personally to each one of you, if you could be able to imagine over the next 5 years, what could be the main use case across these technologies that you see yourself almost working in?
I might start. Yeah, so for me, I think the main use case would be the credit scoring to some aspect, but I think even before that, the customer support. I think it's where there's a lot of the costs for the companies operating in that sector, whether it's like loan reminders and things like that, but also just proper customer support, customer service, even from the initial like data collection stage. I think those kind of things are going to get a lot cheaper with the use of AI, potentially conversational agents that might allow potentially end users that don't have smartphones to interact through text or through audio more easily with interfaces. So you won't require as much manual labor, as much call centers, as much people in support that you did previously, while getting very similar results.
Yeah, I think it's connected to that from a more entrepreneurial point of view. I mean, we see already videos that are being auto-translated to different languages, and the person suddenly speaks in Spanish and it's lip-synced and everything. So I think on a marketing point of view, there will be a lot of use cases there. I mean, even just letting ChatGPT write your stuff up. Coding as well, like, I mean, building an MVP, there's solutions now where you just draw it on a piece of paper, hold it in front of a camera, and it's already coded as a homepage, for example. So I think there will be a lot of ways to iterate kind of building an MVP really much faster, and also kind of make the product more international faster. And like you said, I think customer support, have a conversational client, maybe you can even talk to somebody and they talk to you, and it's an AI. So I think there's a lot of use cases there. For me personally, it's mainly like building MVPs and prototypes really fast.
And maybe also like with user interface, like we talked about, you know, being on the ground and kind of observing how users interact with the software, but we can also kind of see AI being used in a way to identify patterns of user behavior and kind of based on that faster kind of come up with a more user-friendly interface.
Good. Does that answer your question?
Yeah.
Perfect. All right. We're going to close it. Many thanks.